call it a reversal of fortune of sorts. My next guest sees a rebound in the dollar coming now that the economy is picking up. Michael Woolfolk is the senior currency strategist at Bank of New York Mellon. Michael, good to have you with us. Thanks for coming in. This dollar surge that we're seeing, is this temporal?
Well, it's temporary. We're going to probably see that until we get markets returning to full liquidity next week. We may have 2 weeks in the first part of January where we typically see a nice strong seasonal that benefits the dollar. Unfortunately, the bad news is until the Fed begins its process of normalizing interest rates, there's just too many factors weighing against the dollar for it to have any hope of a cyclical rebound at this stage.
So a real temporary situation with the dollar until these rates go up.
Exactly, and I tend to be a bit more ahead of the market when it comes to rates. I think once we get beyond Ben Bernanke's confirmation for a second term, once we get towards the end of the first quarter, I think the Fed is in a very good position to signal its intent to begin normalizing interest rates.
Do you think they have to do that very quickly in 2010 because then they bump up against the midterm elections and then it starts to get very political?
Well, that's one of the things that is supposed to be an important element in the independence of a central bank, that it doesn't make these type of considerations. However, we all know that it probably does factor in at some level. I doubt, however, that in terms of just simply normalizing interest rates or beginning the process, that it will be a political phenomenon. I mean, just economically speaking, we're going to see a return to the old normal in terms of economic growth rather than the new normal of half growth that people had been talking about for some time. And if for no other reason, simply because we could not get the stimulus spending in place in time, to really have it benefit us earlier.
And now we've got it, and as a result, we're going to see this kind of growth.
That's right.
Tell me about other central banks. What about the European Central Bank and the euro?
Well, the ECB does not intend to raise interest rates before the Fed. If it does so, the euro goes higher. They are not in a position to weather that just yet. They're very export dependent right now, and Trichet seems to be very, very sensitive to further euro strength. The Bank of Canada, remarkably sensitive, really, since the summertime to the strength of the loonie.
They're going to be able to rein in the strength of the loonie? Well, I mean, they seem to want to try, but the market doesn't want to let them.
Well, it's very interesting because there's many positive fundamentals that really are behind the strength in the loonie right now. I think that that parity 1.00 is probably the line in the sand, but it's rather interesting. In Canada, Prime Minister Jim Flaherty recently said that he's rather concerned about the mortgage market up there for fear that there may be a price bubble developing in the mortgage market, and they may need to take some measures, such as reducing the maximum term on government-supported or backed mortgages, or in fact insisting upon a higher deposit on a down payment.
All right, so we've got a situation where the U.S. dollar may be a temporary gain, waiting to see what happens with interest rates. The ECB on hold until something happens with the Federal Reserve. Tell me about what's going on in Brazil right now. They're trying to dampen down the increase in the real.
Right. Well, I think one of the reasons why the Fed is likely to act sooner rather than later is because of this asset price bubble that may be forming. Part of the evidence was what I referred to earlier about Canada. Several months ago, the Brazilian authorities put in place additional tax measures to inhibit foreign investment into local securities there. It had the effect of reducing appetite of foreigners and taking some of the bid off of the Brazilian real. And it's been hovering just above the 1.70 level, the dollar Brazil rate. And that was done. If you take them, Brazilian officials at their word, one of the factors that played into that was they were concerned about an asset price bubble in their equity markets. Okay, so they didn't want to see the equity market rising as fast as it did in 2009. It was really a standout year for the Brazilian equity market, the Bovespa. So I think with those two examples, I don't think that you have to look much further to get a sense that 2010, we probably, although we don't have to raise interest rates because of inflation, let's say, we probably need to avoid getting ourselves into another situation like what we've just come out of.
All right. I want to thank you very much, Michael Woolfolk, coming in, currency strategist at Bank of New York Mellon. Always expertise. Appreciate it. Coming